welcome to FXDD TV. I'm your host Lauren, and with me today is Mr. Fred Scala, Vice President of Forexware. Fred has decades of experience in the Forex industry, and he's here today to talk to us about the dollar-Canada pair. Hi Fred, thank you for joining us today.
Thank you, Lauren. Dollar-Canada is an interesting pair. Trading partners between the Canada and the U.S. are it's huge trade flows on both sides, the biggest of which is oil. Canada is the fourth largest exporter of oil in the world. And it's been estimated that Canada has 10% of the world's oil reserves. So you could see it's closely tied to oil. If you look at the charts here, you could see that when you have the Canadian dollar versus the U.S. and oil superimposed one against the other, you can see that they look like exact opposites. It's very easy to express an oil trade with the Canadian dollar. If you think oil is going up, then the opportunity is to buy the Canadian dollar, which would be selling the U.S. dollar Canada. Conversely, if you think oil is going down, then it's an opportunity to buy dollar Canada. So you could express those oil-related, energy-related interests and ideas and positions in a currency pair like dollar Canada. If you look at this chart, you could see that the range for 2019, 136.50 to roughly 130.50, and the range for dollar Canada from last year, 136.50 is the high. We made our high at the very end of 2018, and the low was 122.50. Now, we know that the Fed has slowed down. That normally leads to a weaker dollar. There's no more. There's little chance that the Fed's going to increase their interest rates. So we could see a weakening of the U.S. dollar based on that, and a strengthening of the Canadian dollar, especially if you think that oil is going to continue to weaken, which is what we've seen so far this year. Given what we've said, 136.50 to 122.50, the 50% retracement, which is what a lot of technical analysts look at, is 129.50. As we tape this now, dollar Canada is above 132, holding well, closer to 133 in fact. So we're in the middle of that range if you consider 129.50 an objective. But more importantly, the 2/3 retracement, which is another Fibonacci retracement, a 0.618% retracement, is down at 127.85. So what I really want to say to you overall is when you're looking at the dollar Canada pair, follow oil. Oil is going to be your leader, and you can express those positions. If you feel that oil is going to continue to weaken, then the trade to put on is to sell dollar Canada. I hope that helps you. I hope you have some trading ideas and successful trading.
Thank you, Fred. I'm sure our viewers will find that very informative and interesting. Thank you for your analysis. And that concludes our episode for today. Thank you for being with us. If you have any questions, please don't hesitate to reach out to our customer support team. We are here available for you 24 hours, 5 days a week. Thank you and see you soon.